right, I'm the one that's charged with getting everybody on task. I don't know if I need to gavel or something to hit, but anyway, please feel free to continue to get food. I don't want to have to take any of that home, but I just wanted to thank you guys for coming today, taking a time out of your schedule. Hope you enjoy the food. I thought that was a kind of a nice treat to do something like that. So yeah, absolutely, please. We just appreciate the time. I know everybody's busy. This is a busy time for everybody with school starting back in different areas and the summer buzz and everything like that. But just appreciate your time, and hopefully today we can leave with just a little bit of something to take with us. I always I do a lot of coaching with baseball and youth sports, and I always say you don't have to get 100% better each day, just get 1% better each day. So maybe that's a good goal for us to pick one thing out. So I think they said I had like 4 hours to talk. Is that right? Got 4 hours this afternoon, so 4 or 5 somewhere in there. So, but no, I'm going to keep it. Bring it. Oh yeah, dinner. I didn't know about dinner, so we can all go over and have some food. But no, I think today my goal was to get in front of you guys as realtors and just talk about. And I want to hear from you all too. I want it to be interactive. I know when you go to a lot of these things, you sit and the speaker gets up there and talks, but I want it to be interactive. I want to learn just as much from you as you might pick up something from me. Y'all are out there, boots on the ground in the trenches, doing your real estate deals. And I know insurance is one of the many checklists that you all have before you get to the closing table. So just wanted to maybe pick up some things from you all that we can take back to maybe help with that process as a whole as well. So from the Land of Sky Association release, it says homeowners insurance issues can derail a transaction at the worst possible moment. In this session, Ray breaks down the underwriting factors that are most commonly impact home purchases and sales, including roof age, plumbing types, floodplain designations, and other property characteristics that affect insurability and cost. Ray will also cover the current state of the homeowners insurance market, including industry trends your clients are already feeling and what to expect going forward. So I thought that was a pretty good introduction into what we're going to talk about today. So a little bit of pressure on that to kind of figure out what's going on and things like that. So my goal today, again, is to give you guys some tips, kind of give a state of the insurance industry on where we're at, some of the things we're seeing as an independent agency with some of our markets. And we're going to go over several things that I just mentioned, but to kind of give you guys some tips that might help you through that process, maybe educate you on a few things that you'll see. And then kind of at the end of it, talk a little bit about Wayah and myself on what we do and kind of go from there. So if we can accomplish all that in, what'd y'all say, 4 or 5 hours, that should be pretty good. So we'll keep it there. So where do we start? And again, I want this to kind of be interactive. I know there's a roofing contractor, not to point out folks back here. So they're here. I believe you guys are going to speak at some point, trying to figure it out. So I've already met with him and said, when I talk about roofs, if they have something to throw out there, please do that. You can throw pieces of chicken or whatever you want to do at me, but just throw it out there. So kind of where do we start? I'm going to be referencing a few notes, but I'll try to keep it interactive. I think I was told I was supposed to stay within these two. So if I get outside of it, just throw something at me and tell me to get back in. Start off with a question. Has everybody here own a home, own a condo? Have you all had a rate increase in your home insurance the last year? Everybody probably should be raising their hand, probably very drastic in some situations, depending on the carrier and overall characteristics of your insurance program. There's a lot of factors for that. I'm going to hit on some of the high notes here that hopefully makes you kind of understand like where we're at or where we are at and why. So again, in no particular order, we're going to go through some of that. So what's the state of the homeowners insurance market? The market is getting a little tighter. And at the end of the presentation, I'll give you some good news, some like a light at the end of the tunnel type information. First thing is loss ratios. I know in our insurance business, and in real estate, you have all different kind of numbers too, right? Closing ratios, hit ratios, things like that. Insurance companies look at loss ratios when they price out insurance and they look at acceptability or eligibility of insurance. A loss ratio basically measures money in versus claims dollars paid out, right? So if you have a loss ratio of 100%, that means that for every dollar you're taking in, you're paying a dollar out. And did I say a dollar? A dollar in, you're paying a dollar out for insurance claims. So these numbers are probably about a year old, but typically, especially coming out of Helene, which we still haven't seen the results of Helene. That usually takes a couple of years to see that, and we'll talk about that here in a little bit. But right now, overall, it's about 110%. So when you look at a business, if any of you guys operate your business at 110% loss ratio, what does that mean? That means you're losing money, right? That means you're waking up, you're working hard, and you're losing 10% of your money just for waking up. So Why are those loss ratios where they're at? There's a lot of contributing factors to that. First and foremost, again, rising construction costs. Have any of y'all done any remodeling, any building of houses, any clients do that? Anything like that? Is things cost way more than they did 10 years ago, 20 years ago, 5 years ago? Right. So rising construction costs are definitely a big player in it. I know obviously that tailors into overall claims costs are up. So that 25,000 kitchen fire that you might have is now 55,000. And there's a lot of factors behind the scenes of the contractors that puts us where we're at. Some areas, I can't speak for Asheville. I know y'all are all over Western North Carolina. Where I'm at in Brevard, typically you'll see the average modest house, 250 to 400 a square foot from builders. You see some of the bigger areas, like Toxaway area, things like that. You see somewhere close to 800 to 1,000 a square foot to build. So rising construction costs, therefore, are driving up some of the insurance pricing and eligibility as well. With that is labor costs. Any of you ever hired somebody to come do something at your house recently? The part costs $50, but it's 200 to put it in, right? It takes 10 minutes, right? Obviously, those companies are having to charge minimum premiums. It's an insurance term, but a minimum cost to come out to your house. I joke around that I have a grading contractor that every time I talk to him, which is about once a month, he offers me a job. He said, "Here, I'll pay you whatever you want to come run my bulldozer, do jobs." And I'm like, I tell my client, I don't even know how to turn your equipment on. But the point of that is that labor costs are very high. Labor shortages are still out there, especially in the construction industry. Good qualified labor, companies are paying higher for those type of employees and to keep those employees than ever. And in turn, that goes on into us, the consumers of construction and things like that, which then in turn kind of trickles down to the insurance industry as well. Even before Helene, again, construction materials, and I know I'm talking about construction a little bit too. Even before Helene, we started to see as an industry rising in insurance rates. I do believe in Western North Carolina, and this is where you hold your darts and not throw them at me. I do know that in Western North Carolina, this is 22 years I've been doing insurance. Homeowners rates typically, in my opinion, were underpriced 5 to 10 years ago. You would pay $500 to $600 for a $500,000 house to insure it. Now that same policy is probably $1,500, $2,000, could be more. I do know with coming out of COVID, with supply being lower, with materials and construction costs again increasing, it is kind of, instead of incrementally going up $100 a year, again, you all probably seen 300, 400, sometimes even 1,000 or more on your insurance bill this year. So again, even before Helene, and then obviously with Helene, like we'll talk about here in a little bit, did not help the situation at all. So again, most carriers, when they look at all of this, they have to take into a rate increase in order to be sustainable. So obviously any business is going to make a profit, but right now insurance companies are looking at trying to be sustainable to where they can continue to offer homeowners insurance and not end up like Florida, where we'll talk about that in a little bit too. And if you have clients in Florida and talk to them about their insurance, it's more of an eligibility issue versus a pricing issue. So they're trying to figure out ways, and of course, just like taxes or anything else, increasing the rates to try to be sustainable to help pay for some of the claims they've already promised and paid out, and then also to be sustainable to provide that product in the future as well. So that's kind of where we're at. So let's get into the nuts and bolts of what are some characteristics of a home that need to be looked at in a real estate transaction when it comes to homeowners insurance underwriting. Okay, and again, this is where I want to hear from you all too. I know roofs. Has anybody never dealt with a roof situation in a real estate transaction right now? Huh? Roofs are great. I know that seems to be kind of the number one thing insurance companies are looking at right now for multiple reasons, right? The roof obviously is the thing that protects everything else in the house, correct? So that is probably the number one most frequent claim. It's not the most severe claim that we have. Typically with a roof claim, even if the roof is totaled, you can probably know exactly kind of what you're going to pay versus a pipe breaking in an upstairs bedroom that floods the house. You've got a $500,000 claim. Typically a roof claim is going to be the cost of the roof. However, from a frequency standpoint, it is the number one claim that we see in our business. So insurance companies are getting tighter. They're figuring out different ways to get creative with roofs. And essentially what they don't want is to have a 30-year-old roof that needs to be replaced and you wait till the wind blows one shingle off, and then they're spending 15, 20 grand, whatever a new roof is to do that. So along the lines of that, again, where was I at here? Have you all ever had to negotiate that in a deal between a buyer and seller? So I hear some realtors say, hey, we'll knock off $15,000 on the selling price because the buyer's going to have to put a new roof, right? And by the time they get to us and we say, hey, your roof's 30 years old, you're going to have a new roof. The carrier will write the insurance, but they'll give you 30 days to put on a new roof or something like that. So does that come up pretty often with you guys with roofs? From a selling standpoint, is that kind of a pushback too? It's like, man, I really want to buy the house, but it needs a new roof. You guys have to wiggle or negotiate that in contracts. So that's obviously a big one there. What some insurance companies are doing, we have multiple insurance companies because we're an independent agency, and I'll talk about that kind of at the end of the presentation. But what some of them are doing, when we don't write a lot with these particular carriers, and I'll leave those carriers unnamed. If you want to know who they are, you can call me after the presentation. But some of them are even down to 10 years on a roof. So they expect after 10 years that you need to put a new roof on. Putting y'all on the spot now, y'all are probably putting 30, 40-year shingles on roofs now. That's probably the technology that's out there. So when a client puts a 30, 40-year shingle roof, you have to tell them after 10 years. Again, that's not every carrier, but we have one that does that, and we don't really write too much with them. Our markets remain pretty open with that. We have some carriers that are probably 20, 25 years old. I think after that, you're probably nearing at least the middle or end of roof life there. So they're looking at roof ages when it comes to determining eligibility and or determining pricing. Another thing that they're doing, another thing that they're doing with older roofs, a lot of our carriers will still write the insurance, but they will put what's called an actual cash value provision on the policy on the roof, which means if you have a 25-year-old roof, they will cover the house. But if you have a roof claim, they will pay a depreciated amount for they'll depreciate the age of the shingles. And then they don't do that on labor, but they'll do that on the materials. And a lot of times that sometimes is the client's only option, depending on the age of the roof. So we're starting to see that. Insurance companies are getting creative and putting wind and hail deductibles on the roofs. So if you have $1,000 deductible, $2,500 deductible for your regular fire, theft, lightning, water claims, things like that, insurance companies are doing separate deductibles for wind and hail. And that could mean like a $5,000 wind and hail, or in a rare, very extreme case, and this is what's happening in Florida, is they'll put a percentage deductible on there. So they'll put a 1 or 2% percentage deductible. So, and that's off the coverage of the house. So if you had $1 million house, you got a 2% deductible, you guys can figure out what kind of deductible you would have for a wind and hail claim. So roofs are definitely by far the biggest thing that they're looking at right now. Roof conditions. So in the past, insurance companies wouldn't go inspect every single house that we write. Most of them are doing that now. They'll go out there and they're not only looking for the roof condition, that's one of the bigger things, but they're looking for the overall, functionality of the house and making sure it's a good risk for them. But they'll go out and look at moss on the roofs, bent shingles, curling shingles, evidence of previous damage, things like that. So roofs are definitely one of the biggest things that we see, and probably one of the biggest headaches that y'all kind of come in. But yes, ma'am. And again, it depends on the type of the roof. Typically like slate or metal, like most of my insurance carriers for metal could be up to 30, 40 years sometimes. Wood roofs are a little bit different as well, but slate roofs, I don't see too many of those, but typically if it's a different type of product than an asphalt shingle, they'll be a little bit more accommodating with that. So y'all have a lot of slate roofs y'all run into? A decent amount, depending on the area, things like that. Cool. Now, great question. We see a lot of wood roofs as well. And there's some insurance carriers that wood roof and fire, gonna burn the whole thing down. Some are okay with it, just depending on the age and things like that. But no, great questions. That was pretty much the surface level of what I have on roofs. Anything you guys want to add to that? I know I said I'm gonna put you on the spot, so I'm looking at you. No? Okay. Anything else y'all are seeing though from a transaction that I haven't covered on roofs? Any other wild things? I mean, kind of went over the roof type, roof age. Yeah. So we'll get to electrical stuff and just for roof situations. Is that kind of what y'all are seeing? Anything? Because again, part of this is I want to know. Hey, we saw this crazy thing happen in this transaction. I've never heard of that. So
usually hard and fast. Some of these carriers are fast on the age, or what if there's an evaluation where it's that line.
So that's a great question. I didn't have anything in my notes that. So typically what happens if you're buying a house and that house has been sold 5 times in the last 10 years, there's not a lot of history, right? And a lot of times you can't find that out. So typically we do rely on inspections or appraisals that will go out there. And so long as it's favorable, depending on the insurance carrier that we have the relationship with, we can make a good recommendation based off that. But it would have to look really good and have probably a certified inspector or something like that. But a lot of times when you know the age of the roof, or if you buy a house, that's the original roof, you do the math, it's 30 years old. pretty easy to kind of come up with that. But no, we do accept roof inspections and things like that to help with that eligibility and or price. So, great question.
How about roofs with solar panels?
So solar panel, that's a great question. That's not really a thing there. Solar panels, that's becoming a new thing. So we just ask that whenever somebody spends $100,000 in solar panels, they let us know. We just increase the value of the house. But as far as that goes, that really doesn't affect anything at all. Probably takes a little bit more to replace that roof. If you had to take a bunch of solar panels off and then do the roof job, I'm sure that factors into the cost of the roof. But from an eligibility standpoint, it really doesn't affect that. Somebody else had their hand up.
Is there a minimum number of years that should be left on that roof for the insurance company to feel like, yeah, we're good to go?
So like a minimum number of years, and if you
5 more years and then 5 more.
Yeah, so typically, again, some of our insurance carriers, if they're 20 years, 25-year roofs, and you can do the math and figure that out, they'll kind of do that. We have one carrier that they went away from it a couple of years ago, but they would say, we'll do full replacement costs on a roof up to 20 years, and once the roof is 21, they'll automatically put it on actual cash value that I talked about earlier, like a depreciated amount. But typically, they don't really do that. It's more of just at the time of the policy. And some insurance carriers are getting more creative with technology. It's easier. But they may, if we have the account for 5 or 10 years, they'll pop back in and say, hey, have they done it? And then that's a conversation we have to have. So great.
What about those contractors that
right,
do roof rejuvenation?
Okay, does anybody have issues with plumbing? And it's the one word that starts with a P. It's not plumbing, it's something else, it's a type of plumbing. What's the one that everybody that sees? Polybutylene. Okay, that was a product that was put in the 90s, mid 90s to mid 2000s. Has everybody ran into that at least one time yet? Polybutylene. Okay, so that was there's a lot of class action lawsuits around for that, and from my research, it typically wasn't the piping; it was more of the crimp rings. And I'm not trying to act like I know a lot about plumbing, but there's a certain type of ring that they used. That was the part that failed, and again, a lot of that was replaced, but a lot of it wasn't. So with polybutylene, that is a big concern to insurance carriers, especially if there's prior losses on that house, right? So if they're writing insurance on a house that has had prior losses, and they were water losses due to polybutylene, if you're an insurance company, would you want to do that risk in the future? Probably not. So a lot of times we do have a couple of carriers that will entertain that, but there has to be certain inspections done on it, like he had mentioned a minute ago, a certified plumbing inspection. A lot of times there has to be evidence of a certain type of ring that's on there, the crimp ring that does that. And there has to be, some carriers will get into having, which kind of tailors into something I'm going to talk about here in a minute, with like automatic water shutoff valves and things like that, just to kind of help reduce and mitigate. But most of them want to see updates in plumbing. Typically nowadays it's PEX or PVC. Companies are still actually accepting copper. They just, again, want there to be no pinholes in the copper or any kind of prior water claims and things like that. So polybutylene, has that held up a deal in the past for you guys? Were y'all able to work through it? Somebody want to share any history on that or any kind of situation they had with that? Any other questions on plumbing? That's pretty much the biggest thing. And again, they do want to see, updated, water heaters, HVACs, things like that all kind of run together. I did not have anything with electrical in here, but yeah, you talked about knob and tube wiring. That probably dates back, somebody help me out, 80 to 100 years or more on houses. So most all of our carriers are not going to do knob and tube wiring. That's normally something that most people will get replaced anyway. But have you had that come up with some older houses in Asheville? And I've dealt with it with some older houses in the western part of the area as well. So, yep.
What happens, this is common in Asheville, where there'll be an updated panel in one of these old historic homes. During inspection, it'll reveal that there's actually still some knob and tube in certain sections of the house.
Yeah.
So what happens if the person gets a policy, doesn't know about the active sections, and the house burns down?
Yeah.
Is insurance going to cover that?
Yeah, I think in that situation, if it was unknown at the time, if you knew you had knob and tube wiring, if the agent knew, or if the homeowner knew, or real estate agent knew, and you could prove that, probably could be some grounds to deny a claim. But if it was something like that where it was unknown, fire is a covered peril, they would probably non-renew the policy after that if they obviously knew that was the issue there. So what you're saying is a lot of times the main panel is updated, but there are some rooms that never got updated in that changeover. So no, I think in that case, if it was unknown, there would be coverage for that. But if it is known, it would probably simply be a no, and you'd have to get that replaced. So I hope that answered your question. So cool. Yes, ma'am.
Can I take you back to plumbing?
Yes, let's go back to plumbing.
Client reached out to us and said, you should have told me about the homeowners insurance. And I said, told you what?
One of your clients? Okay.
She said they showed up at my door unannounced and did an inspection in my house and canceled my insurance policy because my water bill was 22.
Mhm.
Is that common practice?
So from a common practice standpoint, again, I go back to like probably communication and not knowing who the insurance carrier, agent, et cetera. We have some carriers that will go out and inspect houses. So if I'm working with you on your insurance policy, I would say, what's your name? Sorry. Beth. I would say, hey, Beth, we appreciate you letting us write your insurance. You will have a inspection from XYZ carrier. They'll come out, do an inspection. So to kind of prepare you for that. As far as they do have a provision where they can cancel within 30 days if they find certain things, but something like a water heater probably should have been talked about before. As an agent, whatever carrier that was, if that was the guideline, I would know that and have that conversation that, hey, your water heater needs to be a certain age to kind of get out in front of that. So typically they can do that. I say it's a common practice, but again, it seems like I would have probably, or we probably would have been out in front of that a little bit better than that instead of just writing it and somebody showing up at your house unannounced and then just getting a Dear John letter in the mail for canceling the policy. So that can be common with particular carriers. If like their age of their water heater was a certain guideline, then yes, they absolutely can do that. But again, I think that goes back to preparing and probably should have been some pre-issuance done there to help with that situation. So.
Give them 30 days to get a new water.
Yeah, so they should have had a 30-day cancellation notice from the time that they would. Yeah, so when they went out there. Yeah, they typically should give a 30-day. Now, once they get past 30 days, most insurance carriers, unless it was some crazy proven reason, they could not non-renew it until the renewal the next year. So that's why a lot of carriers get out there very quickly, because if they are going to take adverse action, they want to do that very quickly because they know if they get past that 30 days, then they have to kind of stay on that risk at least until the next renewal. So.
Is it typically an unannounced thing or with most carriers?
Yeah, so typically our carriers will notify the client, especially if it's an interior inspection. So I'm trying not to go out in left field or in the weeds, but like on these larger houses where they have to go inside a house, absolutely, because they would have to know that you're there. And then, like I said, for us as an agent, we would reach out and say, hey, you're going to expect somebody to show up to your house. Because I get a lot of, you don't want a lot of people to say, hey, there's this random person in my house and they're a third party. And it's like, who is this? And so, yeah, there should have been some communication there for that as well. So great questions. Appreciate the feedback for sure. A couple other things that I kind of already mentioned. So we're seeing some, I wouldn't say requirements or recommendations that might help some of this as you're talking to your clients, sellers or buyers. I mentioned automatic water shutoff valves. Has anybody ran into that with some higher value homes and things like that? Essentially what that is if you guys leave to go to a ball game tonight or go to the beach for the week, pipe breaks in the upstairs bathroom, this automatic water shutoff device will sense abnormal water flow and shut the water off right there. So maybe that's a $20,000 claim instead of a $500,000 claim. So we're starting to see that a lot, especially on the secondary residents and I wouldn't say unoccupied, but secondary houses where they're not there all the time, and some of the higher value homes as well. So didn't know if y'all have ever ran into that from a seller. Yeah, so it goes on the main. Again, I'm not a plumber by trade, but it goes on the main water line coming into the house. Typically, if you don't have it, we can write the insurance for a closing, and then an insurance company will follow up in 30 to 45 days as a requirement that you did that. They realize you can't do anything to the house until you own it, right? So that's typically like a follow-up item. Normally, depending on the plumber, you're looking at probably $400 to $600 to put that on there. Again, depending on their labor charge. But and I tell folks, even if it's not a requirement, it's a great recommendation, right? I mean, even if it's covered and not a requirement, nobody wants to come home to their house full of water. So as you're talking to some of your sellers and buyers, that might be something you could help educate them on as well. So along with those lines, central fire burglar alarms are a lot. You get into the higher values of second homes, again, just to mitigate costs and things like that. So a lot of times when we get referrals from realtors and we're trying to get them, insurance, a lot of times that comes up, especially on the secondary type situation where nobody's going to be at the house. And so for a fire and burglar alarm, it would automatically ring into the fire department or the police station if there was some type of issue there. So cool. Another thing that we're seeing is titling of houses. 15, 20 years ago, it would be Ray and Rebecca Gill that had a title of their houses. Now we're seeing anything from trust to retirement plans owning houses to co-partnerships. The biggest thing we're seeing recently is LLCs. I don't know if y'all have clients that want to do that have done that. Again, for us, most of our insurance carriers are okay with the LLCs. They just want to make sure that that LLC doesn't own 10 shopping malls in Florida, and they're going to be drugged into a lawsuit with that. Most of the time, my clients, when they do an LLC, they're creating that just for that property up in the mountains. And as long as there's no other assets owned or other exposures, most carriers are okay with that. So a lot of times we have to ask those questions up front. How are you titling the house? That's probably the number one question that we ask. So anybody else seeing anything other titling? So depending on which carrier we write with, they'll have their own like LLC or trust questionnaire, and it'll ask specific questions tailored to that, like what assets does it own? It has, each one's a little bit different, but yes, that's how we do that. Of course, the client signs it and says, hey, we don't own 10 shopping malls in Florida, and we're just piggybacking this off and, going to have a claim from somebody slipping and falling in Orlando or whatever it might be. So, but that's a great question. There's questionnaires and documentation behind the scenes for that. So cool. Occupancy of houses. So we talked about like primary homes. That's where we all go sleep tonight, right? Secondary homes, that dictates some eligibility and pricing issues. Used to have like a secondary home, or you had a full-fledged vacation rental. Do y'all have clients that kind of merge those two together now? So we want to come up in the winter in the summer when it's hot in Florida or whatever that is, and go to Florida when it's cold up here. So, but in the other time, we want to rent it out and make some money, right? So typically the insurance product wasn't set up for that, but over the evolvement of that, we have several that will give you a certain amount of rental per week and things like that. So it's kind of evolved into that. But going back to the occupancy of the house and how people use their house, it creates different insurance, I wouldn't say issues, but situations where we have to make sure that we do that correctly, addressing all of those situations. So
a little more about it.
Yeah.
Limitations,
so typically, again, I'm not going to name carriers today, but we have a carrier that will do a secondary home and allow, I think it's up to 180 days of short-term rental. So they feel like that's half a year, right? So if it's over 180 days, they feel like it's more of a rental than it is a home. Therefore, they want to write it as a rental per se. Not to say you couldn't use the house. Yeah, it's more than I expected. We have some that are 16 weeks, but the most genuine one we have is 180 days. So, and we have some that says, nope, if you rent it one night, we don't want to do it because we don't know that you're going to come into my house. We want to underwrite me, but if you're using my house, insurance company doesn't know you're going to throw a party and go crazy and cause issues. So, but yeah, great question for sure. So, all right, great stuff. Let's see. I'm gonna kind of. I know we're going to try to go through this pretty quickly. So, flood insurance. I know I had that on the issue as well, or on the agenda for today. Any of y'all run into flood insurance with deals? Typically what we see after Helene and I just did a continuing education class 2 weeks ago, so it's fresh in my mind. But how many of you here are in a flood zone? And that's a very open-ended question. Everybody should raise their hand. Everybody here. So where we left that CIC continuing education class was that everybody's in a flood zone. So wherever you live, you're in a flood zone. You might be in a much lower hazardous flood zone, but everybody is in a flood zone. Has that ever held up a deal, or is that typically something that gets what I see? And again, this might be a short sample size. Usually we know if they have a mortgage, we know well in advance of that, part of the checklist is a home insurance policy, and we have plenty of time to work on it. There are occasions where people buy houses with cash and we get a phone call that said, I closed on a $500,000 or $1 million house yesterday and forgot to call you because we didn't have a mortgage. So typically the flood insurance usually sometimes comes up at the last minute. That's not as easy as a product to get in place very quickly because a lot of it's written through the government, the NFIP program and things like that. So do y'all run into that a lot? I mean, in our mountains, we're rivers and low-lying areas. Has that been a headache for y'all sometimes with flood insurance, or is that more of a lender requirement than any?
There are just certain agencies that will write those, or is it?
So, I mean, most agencies should be able to offer a flood policy. The National Flood Insurance Program is the one that's backed by FEMA. So that's the one that's regulated. There are carriers out there that have private flood, so they're not backed by FEMA. That doesn't say that they're not going to pay a claim, but you can get more coverage and different variables on the product for that. So I would say most insurance agencies should be able to write a flood policy. I mean, I would think if you're in business to provide that, you're going to run into that. You don't want to write the home and then send them down the road for the flood and then, that type of thing. But there's not a requirement that an insurance agency has to do flood, but it would be a good idea. We have several companies and carriers that we write with. So
Have those policies increased?
So yes, and there's some holdback reasons for that. After Helene and everything settled, there was some redetermination of flood maps, and I could spend 3 hours with y'all doing that, but I'm not going to do that. But yes, those things, they've reevaluated their flood premiums and flood maps, and Zone X would be a house. Nancy, I'll put you on. Your house is in a Zone X. If it floods at your house, I won't be there to file your claim. I promise you. Don't even call me because I'll be gone. But so like everybody's in a flood zone X, but they've redone these flood zones where now houses that used to be in an X are like in an AE or even worse. And so yes, it has affected the premiums. I'm sorry, I can't hear you. Yeah, so FEMA and all the behind the scenes things with that. And again, that's getting a little bit more out of the weeds for me. So I don't know if there's new published maps and things like that, but they are looking at different areas. Yeah. Yeah, again, for sure. So they are looking at doing some of that, especially with some areas that were hit pretty hard. Do you have a question?
Is $1,000 the maximum payout for a
Yep.
FEMA back policy?
That's a great question. Yep.
The house?
That's a great question. So, and the answer is yes. So 250,000 is the most you can get for the house, 100,000 for the content. So if you have a $2 million house, the most you can buy through the NFIP, National Flood Insurance Program, is 250,000. That's where we have excess flood, or we have private flood where we can go out and get 2 million if we wanted to. So
Do these policies cover, basement intrusion, or is it just like?
So that's
the river?
You actually got me to my next point. So the definition of a flood policy, is a condition where 2 or more acres of normally dry land or 2 or more properties are inundated by water. So it's two continuous acres of rising floodwater. So if it meets the definition of 2 continuous acres of rising floodwater that gets in your basement, it should be covered by a flood policy.
What if it's like, so like my house is on a hill,
Mhm.
and so it comes in down the hill, but not up from anywhere?
Yeah, that's you're getting into some claim situations that I don't know a lot of, but again, they would go back to if it was from continuous acres of normally dry land. So without seeing the particulars, I wouldn't be able to answer that. But that's a tough one too, because then you get into landslides and mud flows and mudslides. And
I've got other clients too, where same idea, it's on a slope, and so it's the slope side that gets water intrusion.
yeah, for sure.
And so, I don't really know how to advise them.
Yeah.
I guess except for to call someone, but.
Yeah.
I live at 3,000 feet, and full disclosure, Ray's my insurance agent, has been for 21 years. But right after Helene, about 5 houses up the street from me, also, they may have been at 3,200 feet. They had a massive landslide and a flood in their basement. So as soon as I saw that, I called Ray and I was like, write me some flood insurance. And he started laughing. He goes, well, do you need an arc? The river, the French Broad River, is at the bottom of the hill. And I can't say never, but it probably isn't going to get 3,000 feet. But in that whole Helene deal, for $200 a year, I'm now covered if something were to happen and my basement were to flood. And my basement's fully finished, so it would do quite a bit of damage. So
I did the same thing. I got flood insurance.
Yeah.
Not the flood zone. I had a grave, but it never comes out bank.
Yeah.
But I was like, what'd you say?
for $200, it's $195 actually. So for that, and I advise all my clients on how to do it too, because the rains are increasing as far as the ferocity of them, and for $200.
There's lots of small print, I think, about like what is there mud with it? Is there?
Yeah, there's some, that's,
landslide insurance does not exist in North Carolina.
I get that question a lot. Like, how do you insure for that? You simply can't. So landslides, if you read the front of your insurance policy, the first page, it'll say what's excluded. That's one of them. The only thing that exists out there is a policy that's called difference in conditions, a DIC policy, and I've never written one. I've had a couple people inquire about it, but I don't even know what carrier even would look at that. Probably some Lloyd's of London type syndicate or something like that, but I've never written one in 21 years. So it's kind of interesting with some of the getting on flood. So some of the stats I learned from my class last week, it says it's estimated that 45% of homes in the U.S. are at a moderate to high risk of loss. So like Nancy's not at a moderate or high risk of loss to where she's at elevation wise, but 45% of homes in the U.S. are at a moderate to high risk of loss, but only 4 have purchased flood insurance. So when you start thinking about that, it's pretty crazy. And then I have a stat here from 96%. Well, that just makes sense. I'm just doing math. 96% of US homeowners have no flood insurance. And with Helene outside of Florida, only 1% of flood losses were actually insured. Again, taking Florida out of it because most of them have flood insurance there. So some pretty crazy stats there. Yes, sir.
I have a weird situation. I don't think anybody else could experience it, but I had a city water line break.
Mhm.
And since it came to the surface and that froze my yard and then flooded my house,
Mhm.
it was flooding. So I had flood insurance. So this doesn't need to be a creek or anything to flood your house.
Yeah. In that situation, again, without knowing all the details of your claim, there should be some like water backup of sewer and drains that could have been put on your homeowner's policy that would have covered some of that, but
You don't have flood insurance. So.
yeah, so. Yes, sorry.
Okay. When I lived on the Gulf Coast and we had a hurricane, a lot of people were up high enough to where they did not have flood insurance. I didn't have flood insurance, but I just had a lake outside my house. I couldn't leave. But what they did, because their house was flooded and they knew the insurance wouldn't cover it, they went up and poked holes in their ceiling and even downed a couple of trees to make it look like a tree.
Y'all know she's saying this, not me, right? Are you asking for a friend or no, I'm kidding. I've never had anybody admittedly say that they committed fraud, but I'm sure out of a lot of clients I've had in that many times, probably the odds are one of them probably has, but nobody's ever admitted that to me. But that's I've had some interesting situations before where clients have just don't understand insurance, and again, not everybody does. And 21 years I'm learning stuff every day. But I had to kind of share a side story. I had a situation where this guy called me one day. I had him for 10 or 15 years and never had a claim. And he said, you know what? I've been thinking about replacing my old copper pipes that were put in the 60s. He goes, I want my insurance to pay for it. I said, well, have it caused any damage? Has it leaked? What's going on? He said, no, I just feel like, I want y'all to pay for it. And I was like, well, that's not really how it works. So anyway, we've had that situation. We've had situations with trees that are leaning and, I want them to come take out the tree. Well, they're not going to take out the tree unless it's falling and has hit something or blocking a driveway. That's kind of the trigger for tree coverage. And then I've had a client say, well, I'll just wait till it hits my house then, and then y'all can pay for it. And I was like, if you want to take that exposure, that's on you. Now you've told me, so now you're negligent for not getting the tree down. But anyway, that's a new one for me. Never had anybody do that. So appreciate you sharing that for sure. So.
All knocked off my gutter and I couldn't get out my back door.
Yeah.
And my front door, I had plywood over it because my house was almost 100 years old and it had the special glass in there. So I had to wait for, I called them the chainsaw gang. They kind of came around and they would, cut the tree to where we could get out.
Yeah.
And they didn't charge anything.
Yeah. So no, that's a new one. I've never had that. So yeah, there you go, for sure. So
Place to live.
I know. Anything else on flood insurance?
One thing I learned after I had to rent, because Helene took my entire property. Was that the renter's policy that we got, through USAA for $20 a month covers floods. So for anyone who has rental properties, like it just broke my heart to think all these people who were renters didn't have anything to go back $20 a month.
Yeah.
They could have all been covered. Is that common for renters insurance like that coverage?
To have flood coverage, typically it depends on the carrier. USA is like its own thing, so they're kind of a special thing that probably writes their own form. I don't want to get into the weeds of that. Probably writes their own standards and things. So for sure, for sure, So it's kind of interesting. And one last thing on flood: picture like a map of North Carolina, okay? And this data is from 2024. When I say flood events, that basically events, okay? That might not mean a national flood that made the news, but there were 711 events in the mountain region, 1,106, and what do you call the next region down? The foothills or Piedmont? Coastal would be like kind of Raleigh east, like kind of not on the beach, but coast, 475, and then 371 at the beach. So did y'all hear that? Most of the flood happened in the western half of the state. So when you think of flood, you think of the beach, you think of the coast, things like that. But when you really look at that, We are obviously all in a flood zone as well. So yeah, just kind of wanted to throw a little bit about that in there and see. I know that comes up sometimes in real estate transactions, especially if there's a loan involved where they're requiring flood insurance. So
You have to be in a flood zone to get a FEMA back policy.
you have to be in a flood zone to get the
Flood
no.
insurance goes FEMA back, or can you buy one outside if you're outside of the flood?
So what did we say a minute ago? Everybody's what in a flood zone, right? So
Okay,
yeah.
okay.
So like Nancy's a flood zone X. She's 3,000 feet.
First of the FEMA back policy.
Yes, and you can get, so again, you can get, if you're in the worst flood zones, you can still get a FEMA back policy. So you're gonna pay way more than she does, in that example. So, cool. Some other things, characteristics of the house, again, what will your buyers do with it after they close? Now, I'm gonna joke around a little bit. When you guys get to the closing table and they sign that, and you get your commission check, do you care what they do normally after closing? Some do, because you might want to sell their house again. Where I'm going with that is, for us, we have to ask a lot of questions. Are they going to live in it right away? A lot of people like to buy houses and do what? Remodel, renovate, right? Depending on the extent of the renovation, it poses different insurance issues with us on what product that we can provide for them. And we do have a product for pretty much every situation. You ever have clients that buy a house, they're like, hey, I'm just going to sit on it for 6 months and figure out what I'm going to do with it. So it's vacant, unoccupied, things like that. So just know that sometimes when you ask us as agents, and we don't have an answer back in a day or half a day, we're trying to underwrite that and place that with the right product that's out there, depending on what the buyer is going to do with the house. And then those type of things as well, whether it's going to be a rental property, long-term rental, short-term rental, renovating, moving in, etc. All right, moving on. I'm going to touch on condos for just half a second. Any of you guys sell, buy, have buyers that do condos? Are those interesting transactions when y'all are trying to figure that out? Or is it pretty much here's a price? Is it kind of just like a house? Is there a lot more involved with that? Does anybody understand a condo transaction? I'll tell you from an insurance standpoint, 21 years, I'm still confused on how to write condo insurance. I'll admit it. The reason is obviously every association has their own set of bylaws, their own different guidelines. The number one question I get when somebody calls me, and Beth, you call me and say, hey, you're buying a condo, all I need is contents coverage, right? And I start thinking, I'm like, okay, well, let's have a further conversation. Have you checked with your bylaws of your association yet? No. And you find out, okay, you're responsible from, they cover the shell. They told me I just need contents coverage, like a renter's policy, like you said, we refer to it as a contents policy. But then you find out, Association A, you're responsible from the drywall in. Association B's from the studs in, from the paint in. And then you realize if you've got a 3,000 square foot condo, all the interior walls, flooring, ceiling, kitchen cabinets, things like that is your responsibility. So we have those conversations to try to educate. And condo insurance in Western North Carolina is very inexpensive. So it's one of those things, even if you read the bylaws 20 times and you still can't understand it, it's better to have it, not need it, than vice versa. We actually had one condo association that I'll remain nameless, that I read their bylaws, and it literally said that they were responsible for half the stud and the unit owner was responsible for the other half. So I'm picturing a claim, and you have two adjusters arguing over a 2x4 stud in the wall. So my point is condos can be a little tricky, and we have to kind of take a deep breath on doing those as well. So
The HO6?
HO6 is a condo policy, so it has building coverage and contents in it. The HO4 is what your renter's policy is. It's a HO4. Typical homeowners insurance policy is an HO3, not to get too much in the weeds, but yes, an HO6 is specifically for a condo. Absolutely. And it's got some other coverages in there for loss assessments and things like that you might get hit with on an association kind of standpoint as well. So
What if the condo is a vacation rental? Does that add another layer?
not really. Usually what we ask is the individual unit owner, what are you doing with your condo? And then if you're going to rent it out and then we have to place that with whatever carrier, but that really doesn't matter. They'll ask number of units in a condo building. If there's 500 versus 5, they know if you leave the stove on and burn everybody else's condo down too, that they're going to have a little bit higher claim. So we might look at that from a liability standpoint. So no, that's a great question though. Yes, ma'am.
That's one question you guys know too. So you added basically a flood insurance rider under your insurance policy.
It was meant as a separate policy.
A separate policy entirely?
Because my carrier can do flood insurance.
So based on the event, and this may not be across the board thing, it may be by carrier, do you have to kind of pick or choose which you're going to go with? Like, am I going to call this a flood insurance claim, or am I going to call this something else claim? Someone told me one time they had to, like, they had to, if they had flood, if they used the flood insurance policy, all it would cover was contents of their house. Does that make any sense?
I think you're good. So what was the situation? Was it how did the water get in the house? Was it 2 acres of rising flood water?
Yeah.
That's probably what they're going to go back into. So if they had a flood insurance policy that had, again, her example with USA might be something totally different than USA did, but typically you have to buy a separate flood policy to cover just contents if you wanted to, or building and contents.
Okay.
If that was
So
your
the
question.
Insurance can cover building.
Yes, absolutely, for sure. Yeah.
Whatever. That helps, thank you.
Yeah, absolutely. Cool. So kind of with all that said, what markets in North Carolina and surrounding states that we are insured, that we actually write business in, they're trying to prevent what's happening in Florida. Many of y'all have Florida clients that y'all deal with, probably a lot, right? They have situations down there where if they can even get insurance, they're having 5, 10, I've seen 10% deductibles on their homeowners insurance premiums, to the point where they'd rather just self-insure a $3 million house because they're paying $85,000 a year in insurance and it's not worth it. I have a lot of clients, even with property insurance rates going up here in Western North Carolina, and I tell the client, hey, your homeowner is $2,000, they immediately say, man, that's a great monthly rate. You ought to see what I'm paying in Florida. You know, I'm like, wait a minute, whoa, that's $2,000 for the year. And they're just floored with what they're having to pay for in Florida if they can even get it. Because a lot of markets, you see every day on the news, markets are exiting Florida and other surrounding, coastal states. So again, our industry, they're trying to do what they can to provide that product and not get so saturated when they do have a big, weather-related event, to where they can, be sustainable in the future, for sure. Cool. Yes.
Flood insurance. Is there not that cost difference, but is it more to get a flood insurance policy for a condo now than it is what they're looking for?
I think it's not necessarily. I mean, they do rate it a little bit different based off, and again, to get in the weeds, they used to require flood elevation certificates. They really don't look at that much anymore, but if you have a basement, if you have a crawl space, if you have a slab, like they do kind of rate that a little bit more. When you get down on the coast, they'll ask if you have like, I'm getting kind of in the weeds here, but like enclosure openings if the water can flow through and things like that. But yes, it does matter a little bit on some of those things, but not as much as you would think. So cool. So kind of moving on towards the end. So like, what are we doing as an industry to help, as insurance professionals? What's the good news and kind of what's the future as it relates to property insurance? So we continue to educate our clients just like we're doing here today. Like I'm getting a lot of good feedback, a lot of good stories of poking holes in roofs and things like that. So we're always educating our clients, talking about some of the things we talked about, right? Like we can control the controllables in life, right? And that's a metaphor for life. We can't control weather-related events. If we all go home today and there's storms and trees down and things like that, but we can do our part to kind of help mitigate, educate, things like that with some of the, I wouldn't say requirements, but recommendations of water shutoffs, of central alarms, they even make things out there now that's called low temperature sensors. Have y'all seen those? So it kind of incorporates with your central alarms. Basically in the winter, if your heating quit working and it got below a certain temperature, it would trigger it. Let someone know and you can get that fixed before that pipe breaks and you have a mess. So just the more education we can do, the recommendations to help reducing the risk and exposure of claims, thus in turn in the future will help with placing property insurance. And again, feed down to you guys with selling houses and being able to check that box off amongst the 1,000 things y'all have to do, that insurance might not be such a headache in the future. Our homeowners markets and property markets, we remain open and strong. Again, we have some carriers that are very strict. We have some that are still willing to write, depending on certain characteristics. I do feel like I was going to close with this, but I'll say it now. But I do feel like the market is softening up a little bit. I think they have taken their rate. I know we've all felt it. Trust me, when you get everybody, if you have a mortgage, like once a year you get your mortgage thing and it's like, here, we did our reassessment of your mortgage for the year. And it's like, whoa, you owe like this much more money. And you start looking at it, it's typically your taxes and insurance, right? And those things keep going up. But I do feel like the insurance rates will soften hopefully this time next year. Maybe I'll come back and speak 1 year from now and we can all have some other conversations where the market's kind of mellowing out a little bit. But and Helene, again, I know it usually takes a year or two for some type of event like that to catch up with rates. So we're still trying to figure out, I don't want to say this the wrong way. The only bright spot with Helene is that a lot of homeowners insurance claims were not covered. It would have been covered under flood if the client had a flood policy. So, but there was a lot of wind, a lot of things like that, trees and roofs and things like that. Obviously we had a lot of them in my book of business personally. So, but with that said, I do think the market is softening. I do know that some of our insurance carriers even this week have loosened the guidelines on roofs a little bit, gave us more years. We had one carrier took away a percentage deductible, things like that. So we are seeing some signs of that getting a little bit better and things like that. Again, for the future, talking about the softening of the market, roof guidelines, things like that. And again, just kind of controlling controllables. I'm almost done. I'm going to talk about our company real quick for just a half a second and then we'll be done. But I always like to leave something that wasn't on the agenda. I always like to leave you guys with something that you might take away from here. Does anybody know what an umbrella policy is? I know we've talked about several different policies. So pretty much, does anybody have an umbrella policy as a realtor? I would say if you don't learn anything today, go talk to your insurance agent and ask them about an umbrella. So an umbrella policy is pretty simple. If we're out in the rain, it's going to cover me. If Nancy comes under the umbrella, it's going to cover her. If Beth comes over, it's going to cover us. So kind of use that illustration for insurance. In your auto policy, does everybody go home every day and check their auto policy and look at their limits? And if you ever can't go to sleep, I would advise you to get that out and start reading it. It's better than any medicine you'll take. Just start reading it and put you out to sleep. But if you look in there, you'll have certain liability limits for your auto and your homeowner's liability. So for example, if you have 50,000 or 100,000 liability and you get into an accident and a claim $600,000, how much do you think your insurance company is going to pay if you have a $50,000 limit? Everybody say 50,000, right? So if you have an umbrella, they start in increments of $1 million and they go 2, 3, 4. I've got some clients that buy a $10 and $15 million umbrella, but essentially that same $600,000 lawsuit you might have against you would be covered if you had an umbrella. Somebody asked me what the cost of an umbrella is, depending on how many cars and toys and things like that. You're probably looking at $200 or $300 a year for an umbrella for $1 million. Y'all drink coffee? Do y'all probably spend more at Starbucks than that for coffee? So I would. How many of y'all are all realtors, right? Here, except the roofing guys. Do y'all ever have clients in your vehicle? Come on. Do y'all have clients? You take clients around in your vehicle, or y'all always on the road showing properties, listing properties, right? So you're driving quite a bit. The exposure's there. So I'll always just try to leave, and that goes for any client that I deal with. Just talk about an umbrella policy. That's more, again, a roof claim, you know how much it might cost. A property claim, a liability claim, you never know who you're going to hit and how severe that's going to be. So have a conversation with your agent about an umbrella policy. That was kind of something way off topic, but yes, ma'am. Yeah, absolutely.
It's like bond, like a law. It's a higher rate, and you're more than 5 miles from a fire station, a higher rate. So outside of like actual obligations like knob and tube.
Yeah, for sure.
What characteristics automatically put you in a rate?
Yeah, so that's a great question. So log construction typically is a higher rated thing. For some of our carriers, it's an eligibility guideline. They just don't want to do it. We have several that will. So that's the first part of your question. Log homes, the construction of a log home is way different than any other kind of stick-built home. So I think you have to find a carrier that will entertain that type of construction. For insurance carriers, it does. Yeah, we probably have 10 to 12 or so, depending on the situation that we write home insurance with, and maybe 3 of them will entertain a log home, just for obvious reasons, right? I mean, just the construction is way more. So yes, and they underwrite that and pay a lot more premium for that. Not a lot, but more. Your other part of your question was distance away from the fire department, right? So typically you run into that. So that's getting into the weeds a little bit, but it's called a protection class. And every fire department around here, whether it's a city, rural, volunteer, urban, whatever it is, they have a protection class rating that's given to them by the state of North Carolina Fire Department official, whatever they're called, the ISO, Insurance Service Office. So what they do is they're assigned a protection class. As long as it's within 5 miles, they get that certain protection class. So the lower the protection class, lower the rate. When you get over 5 miles, you get what's called a protection class 9. And again, it goes back to eligibility and or value. And then obviously the pricing increases a little bit too. But from an eligibility and pricing standpoint, it's really, I mean, we can obviously write it, but the client's going to pay more and the market will be a little bit less. And when you get over 6 miles, that gets into what's called a protection class 10. And there's very few insurance companies that would write that. So, and you will pay for that one. That means you're over 6 miles. So again, going back to like reducing the risk, right? If a fire department can't get to you for 45 minutes, probably not gonna have much of a house left versus if they can get to you in 5 minutes. So no, great questions. Trying to think of anything else along those lines. As a road miles. Let me rephrase that. Six road miles. Yes.
Just like from the Weaverville Tractor Supply fire station, and I'm in that class.
You're in class 10 or 9?
Over 6 months.
Over 6 miles, yeah. See, it is, yeah. It's expensive, yeah, for sure. You have a log home too? You have a log home too? Wow. Yeah. 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 And without getting into the nuts of your policy, it would depend, nuts and bolts, it would depend on, you know, the coverage amount of your house and things and deductibles. But yes, you're probably log home over 6 miles. Yeah, you're paying more than it's especially, it is, it's your home, right? So
Sold like 1 or 2 log houses before I bought mine. I
Yeah.
didn't know that until I went through it and I was like, oh.
yeah. Yeah, for sure. So yeah. But yeah, just a little bit about us. I was talking to you earlier. She said it right. Tell everybody how you pronounce her name real loud. Say it.
Why?
Wayah. So a lot of people look at our agency and is it Wayah? Is it, you know, Wayah? I've had all kinds of stuff. And my son, I told Nancy, my son who's now this tall, used to be 4 or 5, obviously, and he would say Wayah, like karate. He was into like karate, but it's pronounced Wayah. If you ever Macon County, Wayah Bald's a beautiful area over there, and so it's a Cherokee Indian name that means wolf. So that's kind of where our name come from. But we've been around since 1955. We're licensed in multiple states, so we're not only licensed in Georgia, but Florida, South Carolina, Tennessee, North Carolina, South Carolina, Georgia, Tennessee, and Florida are kind of the 5 states that we're licensed in. So a lot of times we don't write a lot of property insurance in Florida. Just we do have a couple of markets that we entertain that, but we typically do a good job. I have a lot of clients. We write their Florida auto in their secondary home here and put them together and kind of package that. So it's kind of interesting how we have a nice little niche for that. But again, we're a full service independent insurance agency. Our goal, we're more of a concierge type service. So we do a full line of personal lines insurance, meaning like home, auto, boat, RV, marine, motorcycles, all the toys. That's kind of more of the personal lines, umbrellas. We do commercial lines, which is business insurance, contractors, restaurants. I personally work a lot with nonprofits, churches, things like that. So pretty much anything that's out there. We do a lot of bonds for big construction projects and things like that, DOT bonds. We have a full staff. We have 30 or 31 folks that work for us. So we have different divisions. I kind of do a little bit of everything, but we're kind of specialized, most of us, in what we do. But we have a full line of life insurance, individual life, individual health. I do individual life. I don't really get into the health insurance piece. And we do have a full line of what I'm trying to say, group health, group life, things like that. And we do have some investment products that we do. I don't personally do those, but we have a division that does that as well. So again, we try to make y'all's and your clients and our clients' insurance dreams come true, right? So we have a lot of different carriers that we partner with. We don't take those partnerships lightly. We look at the ones that are going to help us to place those businesses. And I do know that I do a lot of personal lines as well. And I know that the old days of going down, knocking on doors and selling personal lines insurance and home and auto like vacuum cleaners back in the day, that's gone. So probably our number one referral source is realtors and attorneys and personal acquaintances. So I just want to thank you guys, because y'all keep our business going, and we try to work together with y'all to help y'all get to the closing table a little quicker. But I do know that that's kind of the number one thing now is realtor referrals and things like that. And typically we do a good job for a realtor. They want us to do the next one and things like that. So I'll kind of close with that. I had a little something from our website to read, but you guys can hop on our website and kind of read about us a little bit too. But if there's ever any situations y'all come up with or any questions from this, or if y'all have some clients that you'd like for me to help you out and give me a shot, I'd appreciate the opportunity, and hope y'all enjoyed lunch. That was a pretty nice treat. So hope everything's gone there. And again, just wanted to thank the association for having me. And I do really appreciate all the interactiveness. Normally when I talk on some of these things, I assume y'all are realtors, so you have to be a little outgoing and, things like that. So I knew I'd get some questions, but I've spoken at some of these things where they just, it's just, okay, we'll move on to the next one. So, but any other kind of questions, comments about anything we talked about? Again, really do appreciate your time. I've left some business cards and pens and things like that. And other than that, y'all have a great weekend. So, all right. Thanks, guys. Appreciate it.